Ladies and gentlemen, good day and welcome to Q1FY27 earnings conference call of Jupiter Wagons Ltd. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Prathamesh Kamath from Systematics Group. Thank you, and over to you, sir.
Good afternoon, everyone. Thanks for joining us today for the Q1FY27 earnings call of Jupiter Wagons Ltd. On behalf of Systematics, I would like to thank the management for giving us the opportunity to host this call. Today, we have with us Mr. Vivek Lohia, Managing Director, Mr. Vinod Agarwal, Chief Financial Officer, and Mr. Puneet Sabu, Vice President. Now, I would like to hand over the call to the management for their opening remarks, and then we can open for Q&A. Thank you, and over to you, Vivek, sir.
Yeah, thank you very much. Good afternoon, all ladies and gentlemen. Thank you for joining us today to discuss our performance for the first quarter of FY27. I hope you have had the opportunity to review our results, presentation, and investor communication circulated earlier. FY27 has begun on a strong note for Jupiter Wagons, marked by continued business momentum and meaningful progress across our strategic priorities. Our focus on portfolio diversification and investments in technology capacity and manufacturing capabilities is enabling us to strengthen our competitive position and capture the significant opportunities emerging across Indian railway and mobility sectors. During Q1 FY27, consolidated revenue from operations increased 46% year-on-year to 671 crore, while EBITDA grew 9% to 65 crore, translating into an EBITDA margin of roughly 10%. Profit after tax stood at 26 crores with PAT margin at 4%. As volumes increases and operating leverage improves, we remain confident of delivering stronger profitability in the quarters ahead. We have secured fresh orders worth rupees 264 crores from JSW Rail Logistics and the Central Warehousing Corporation, reflecting continued customer confidence. In addition, we have also secured additional orders worth rupees 211 crore from JSW Port Logistics and Odisha Alloy and Steel Private Limited. The JSW order comprises 7 BUSM rakes covering 329 BUSM wagons, while the Odisha Alloy order constitutes 150 wagons under the LSFTO scheme. These orders reinforce the growing opportunity in private wagon ownership and leasing while strengthening our leadership in this segment. A key strategic milestone during the quarter was the strengthening of our rail wheel platform. We completed the acquisition of the remaining 1.94% stake in Jupiter Tatravagonka Rail Wheel Factory, increasing our ownership to 100% and giving us complete strategic and operational control as we prepare for the next phase of growth. Building on this foundation, we entered into a landmark strategic partnership with Lucchini RS of Italy and Cimest. Under the partnership, Lucchini RS and Cimest, an Italian government financial institute, shall acquire a combined 25% stake in JTRWF with an investment of approximately 290 crores. Beyond the capital infusion, this partnership brings world-class rail wheel technology, engineering expertise, and global market access. Together, we are creating India's first fully integrated private sector rail wheel manufacturing platform, centering domestic manufacturing capabilities while establishing a strong base for exports and enhancing our global competitiveness. Beyond our traditional railway operations, we continue to build Jupiter Electric Mobility as an important future growth platform. During the quarter, we have secured 110 megawatt of BESS orders for FY27 through strategic MOUs with Chalukya Power and Pick Renew across utility scale and commercial and industrial applications. In parallel, we expanded our clean energy portfolio with modular containerized BESS solutions in 10-foot and 20-foot formats, addressing applications including renewable energy integration, diesel generator replacement, and mobile energy storage. Momentum has accelerated further after the quarter. GEN emerged as the successful bidder for two standalone BESS projects in West Bengal with a combined capacity of 100 and 400 megawatt, covering the Jirat and Kharagpur projects. These projects involve approximately 400 crores of BESS supply and commissioning and will operate under a 15-year build-own-operate model with West Bengal State Electricity Board. With these wins, GEM Energy's BESS order book now increased to approximately 500 megawatts, valued at over 500 crores. We are targeting a BESS order book of approximately 1,000 crores by FY27, reflecting our confidence in the structural opportunity presented by India's rapidly expanding energy storage platform. We see energy storage as a natural extension of our mobility and engineering capabilities and an important opportunity to participate in India's transition towards a renewable-led power system. Our objective is to build a scalable, technology-driven BESS business, serving both utility scale and commercial and industrial applications. Another important milestone was achieved by Stone India, which received RDSO approval for its freight brake systems during the quarter. Commercial production commenced from July 2026, enabling the company to begin supplying freight brakes to the railway sector. This approval expands our railway safety product portfolio and provides another avenue to participate in the growing demand for indigenous value-added railway components. Our priorities remain clear. We will continue to expand our manufacturing footprint, strengthen backward integration, leverage technology partnerships, enhance our product portfolio, and improve execution capabilities. At the same time, we remain focused on operational efficiency, capital discipline, and improving profitability as we scale. Thank you for your continued trust and support. I now request the moderator to open the floor for questions.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. First question is from the line of Rehan Syed from Trinitra Asset Managers. Please go ahead.
Yeah, hello, good afternoon, sir. And I have some couple of questions. First on your, so with the, first question is on your order book side. So with the current order book at around 4.53 crore, so could you provide a broad segment-wise breakup between railway wagons, wheel set components, or either commercial vehicle bodies and other businesses along with the expected execution profile for FY27 and FY28?
Could you repeat your final question? I could not understand.
Yeah, sure, sir. So my question is around your order book, which is around 4,500 crores plus. So could you provide a broad segment-wise breakup between your railway wagons, wheel set components, commercial vehicle bodies, and other businesses, along with what is the expected execution profile for FY27 and FY28?
Understood. Thank you.
Yeah.
So our railway wagon order book, which includes both railway as well as private order book, stands at approximately 3,000 crores. The other meaningful order books, I will just name the wheel set business. The order book is about close to 700 odd crores. And the commercial vehicle segment, it's about 500 crores. And as we had mentioned that on the best side now, our order book stands at about 500 odd crores, which includes the last order which came in the current quarter from the State Electricity Board. So this is roughly the constitution of our order. We on the railways, on the wagon side, we expect to execute sizable percentage of the order book in FY27 itself, because most of our deliveries are for FY27, and we will continue to build on further order books there. So if you look at the overall order book, I think about we are most of that order book currently which we have should be executed in FY27 itself. About we are looking at about 60 to 70% of the order book being executed in the current financial year.
Okay, sir. And sir, just if you have mentioned right now about railway wagon segment, so just wanted some clarifications. So sir, your railway wagon production is around 1141 units in Q1 FY27 versus if we have seen in last quarter, it's around 1347 units. So just this is my understanding correct, that this was because of the sequential decline primarily due to seasonality or execution scheduling or capacity constraints? And just could you please help me understand what is the expected production run rate for the remaining quarters of FY27?
So this was mainly because currently our focus is mainly on a lot of private sector order book execution. And in the first quarter, there was a transition because if there are a lot of new wagons which we started producing. So when you are producing a new design of wagon, there is a prototype approval and so that has its own time frame attached to it. So that is the reason you see a dip. But going forward, I think in the next 3 quarters, you will see the executions improving compared to last year.
Okay, sir. And then my one last question from my side, and I'll join back in the queue. So my last question is around your Odisha Greenfield Railway facility. It's targeting partial production by the end of FY27 and full commissioning by the end of FY28. So what capacity will become operational in each phase, and what would be the expected utilization ramp up, and what do you expect the project to achieve EBITDA break-even? And just add on in this question only, once your Odisha railway facility is fully operational, what proportion of production do you see being absorbed internally versus sold to third-party domestic customers and exports? And also, how does the expected margin profile compare with the existing wheel and axle business?
I got it. Your question covers everything. It's not one question. It covers
Yeah.
So I will briefly, I'll not get into details here, but briefly, we expect we have 2 lines. One is the axle line and one is the wheel line. So in FY27, we expect the axle line to get commissioned. And FY28 is when we have targeted for the wheel line to get commissioned. So once both lines are commissioned, we are looking at revenue of anything between 2,500 to 3,000 crores is our revenue target. And definitely we are targeting a bit of at least 50% in this business, if not higher. Again, first priority is definitely going to be the captive consumption. And by then we expect the wagon order books also to become very strong. So definitely, I think as we have always mentioned, retained that about 50% of the capacity would be for our own internal use and the domestic requirements, and 50% of the capacity is earmarked for the export business. And overall capacity is around 100,000 wheel sets is the rated capacity of the facility.
Okay, sir. Thank you for your detailed clarification and good luck for your coming quarter.
Yeah. Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the question queue, please limit yourself to 2 questions only. Should you have a follow-up question, please rejoin the queue. Next question is from the line of Koundinya Nimmagadda from Jefferies. Please go ahead.
Yeah. Hi, sir. Thanks for the opportunity. 3 questions from my end. So the first thing, if I were to look at, right, now your wagon realization seems to have gone up this quarter. I mean, can you throw a little bit of color? Where would that number be directionally? Because our standalone sales are higher than the wagon sales. Just trying to understand that little breakup, if you can provide some color on that.
So as I mentioned to the last caller, that the first quarter was a slight transition period for us because there were a lot of new designs which we had started producing. So there was a transition period in terms of the prototypes which we had to make. But from second quarter onwards, definitely you will see a spike in the wagon numbers. So
my question is a little different actually. I was trying to understand if the wagon realizations have gone up materially, because standalone sales growth vis-a-vis the wagon sales growth.
The realization of the what was it last year? Mix of relevant. Okay. So the wagon realization continues to remain the same. I don't think there is much change. Yes, but what has happened is that the non-railway side of the business has gone up. So that has definitely resulted because the non-railway, the margins are better. So compared to, if you look at the same quarter last year, I think it was about average was 38 lakhs. And right now we are at 41.5 lakhs.
Understood, sir. Sir, my second question is, if I were to look at the EBITDA level, right, it appears that the subsidiaries have reported an EBITDA loss this quarter. Can you help us understand, I mean, what is happening here?
Which subsidiary?
Because the standalone EBITDA is higher than consolidated EBITDA, therefore it appears subsidiaries haven't contributed to EBITDA actually.
So the mobility, so as we have mentioned that when it comes Stone India, we have got the approval now from RDSO for the freight brake systems. So I think from third quarter onwards, Stone India will become profitable. So maybe in the second quarter you may see slight borderline negative numbers, but from third quarter Stone India will turn positive, because now it's a question of ramping up the production. On the Jupiter Electric Mobility, I think which we have continued to maintain is that from FY28 onwards, the business is going to turn EBITDA positive for us, because as FY27 is for us is building on a core technology and building on order books. You've seen a sizable order books coming in. So from FY27, you will see a big ramp up on the business. I think the only other JV which is the JWL Darko, which again I think by in the coming quarters we will start executing. We have a very strong order book now from Indian Railways. We'll start executing those order books. So I think before the end, by the third quarter, all the JVs will start reporting positive EBITDAs as per our estimations. Only the GEM numbers, the positive EBITDA numbers will be in FY28.
Sure, sir. Sir, on the VZ side, right now, post a transaction, I mean, it's a little confusing for me. If you can help us understand, one, what is the total CapEx now? Out of that, how much is that, that will go out of Jupiter's pocket? And if you can brief those mechanisms, how does it work?
So the
What is
total
the plan
CapEx
from your side?
remains, the project CapEx remains at 2,600 crores. Out
Okay.
of that, Jupiter was supposed to infuse 900 crores. Now, out of the 900 crores, the new investor brings in approximately 300 odd crores. So now Jupiter's infusion now goes down to 600 crores.
Understood, sir. Sir, if I may ask one last question, what is the status of that 1 lakh wheel tender, wagon tender? If any update on that?
So, unfortunately, right now I cannot give you any. See, the railway trade demand continues to grow and that continues to remain strong. So, and there is the railway continues to maintain their target of loading of 3.5 lakh billion tons of loading. So again, we don't see any challenges on the demand side. We are just waiting for railways to firm up their requirements.
Sure, sir. Got it. Thank you and all the best.
Yeah, thank you.
Thank you. Before we move to the next question, a reminder to the participants to ask a question. You may press star and 1. Next question is from the line of CA Garvit Goyal from Seneri Alpha. Please go ahead.
Hello. Am I audible, sir?
Your voice is a bit low.
Hello. Am I audible?
Yes, please go ahead.
Yes, sir. And my question on Stone India side, like we commence our production on freight brake system as on July 2026. So that support our order book now. So what is the EBITDA percentage after FY27 second half we can estimate from that?
So again from FY28, 27 again I cannot, from FY28 onwards definitely the EBITDA will be 15% plus on the business.
FY28 and onwards, sir?
FY28 I can give you, so as I have told you that the volumes are going to build up gradually. So, for this year to give you color on the EBITDA numbers would be a little challenging. But we expect that by end of this calendar year, we will reach our capacities which we are estimating. So once we reach the capacities which we are targeting and estimating, it should be a steady EBITDA of close to 50%.
Okay, good to hear, sir. And the second question on percentage of our current freight wagon manufacturing requirement is fulfilled by the Stone India brake system versus external vendors, sir.
So we again, as I've told you, before end of this calendar year, 100% of our requirements will be met by Stone India.
Okay. Any current percentage, sir? They are.
As we are ramping up, honestly, I don't have the numbers, but it is not meaningful. Because I'm talking about in the next 3 to 6 months itself, the ramp up will happen that 100% of our requirements are fulfilled by the subsidiary.
Okay. Thank you, sir. All the best for this.
Thank you. Next question is from the line of Daksh Prasad from Desperado Research. Please go ahead.
Am I audible?
Your voice is very low, Daksh.
Just a second. Hi, I'm audible now.
Yes, please proceed.
Yeah, I just have one question, sir. Our consolidated revenue declined sequentially this quarter. Was this primarily due to the seasonality, or were there any execution constraints?
Compared to last quarter this year or compared to the last quarter?
The last quarter, sir.
So there is a marginal decline in revenue, and that too I had mentioned because we were transiting to new designs of wagon, because our order book, if you look at our order book, it is primarily on account of private wagons. So if you look at today our order book, I think around close to 80% of our order book is all private wagons. So we had to, this was a quarter when we shifted to new designs. So there was a transition which was there, but in the coming quarters, I think that should not be a challenge.
All right, sir. That's helpful. Thank you.
Thank you. Next question is from the line of Balasubramaniam from Arihant Capital. Please go ahead.
Good afternoon, sir. Thank you so much. Thank you so much for the opportunities. Sir, actually, Indian Railways, they reduced in terms of wagon production target. So what is your thought process on that, and when we can expect a substantial ramp up in that freight wagon side?
So Indian Railways not reduce their wagon targets. Whatever the order books which we have from Indian Railways, there is no reduction in terms of the requirements which they have given us. That continues to remain the same. The only challenge remains is on the new order book from Indian Railways, which we see we see the growth. We don't see any slowdown in the growth momentum, and in terms of any kind of target reduction by Indian Railways, because they continue to maintain their loading projections. So we expect new order books to come soon. But if you want us to give us any exact timelines, again, very difficult for us to project any kind of timelines for the same.
Okay, sir. So this in that Odisha plant, I think earlier call you mentioned about civil construction is at advanced stage, and a partial production is expected by Q4 or Q1FY28. How much total capex incurred so far, and what's that upcoming capex, especially for this plant?
So as we have mentioned, the capex is ongoing, so it's very difficult for us to give you precise numbers, but I think by majority of the capex will be done by Q1 of next year is when we expect majority of the capex to done. In terms of equity from Jupiter side, whatever equity infusion was needed to be done is already done. Now we have a new partner which has come into the project, Lucchini and the Italian government. We expect their equity infusion to happen very shortly. I think before middle of next month. So that is the balance equity infusion which is needed for the project.
Okay. Sir, in the passenger system side, the partnership is finalized. What is the status on that?
It is, we are at a very, very advanced stage, and I think before the end of the year, we will be announcing a partnership.
Okay, sir. Sir, that Jupiter electric mobility side, I think we have that best business around 100 megawatt, 400 megawatt hour this project in West Bengal. It's a basically build, own, operate model. So I'm trying to understand how we are funding for this project, and what kind of project IRR and ROE we can expect.
So the project IRR is quite strong for us. It is 15% plus would be our project IR. And one of the key reasons is that we have, if you look at, we have, as a producer, we are very integrated. So from our own container manufacturing all the way up, we are quite integrated. So we are producing our own BMS, our own EMS. So we are not dependent on, outside technology. So the IR remains to be strong. We have not formed up in terms of whether it will be through internal accruals or we will use debt to finance the project. That is yet to be ascertained.
And what is the pipeline that websites are in upcoming orders?
As you mentioned that, we are just not focusing again on the utility EPC segment. It is a mix of CNI as well as utility. So on the CNI segment itself, we continue to grow very strongly. If you look at month on month, our growth is close to 80 to 100% on the CNI segment itself. So this year we expect complete order books to be about 1,000 odd crores. And next 3 years we are looking at least 5,000 odd crores of order books in this business. Because again, on the demand side, the demand continues to be very, very strong. And it is both on the CNI as well as on the utility side. We don't see any kind of demand challenges. So we are right now focusing more on the execution and building our capabilities. I think that is our key focus. Because demand side, I think there is more than enough demand in this sector.
Yes, sir. Sir, in Q1, I think we have seen substantial increase in commercial vehicle bodies and axle, but the wagon got declined. So could you please share in terms of
again,
margin
as I
difference?
mentioned that, Q1 there was a transition where I mentioned to 3 other callers before. There was a transition where we were, we had moved to new designs on the private side. So that design development takes a little bit time. So that, unfortunately, the entire transition happened in Q1. So Q2 onwards, you will see definitely increase in the numbers.
Okay, got it, sir. Thank you.
Thank you. Next question is from the line of Sandeep Mukherjee from SKP Securities. Please go ahead.
Thanks for taking my question, sir. So my only question is, what is the number of pending wagons as of Q1FY27?
In terms of the value would be?
In terms of volume.
For the number of wagons outstanding?
Yes.
It is about close to 7,000 odd wagons.
7,000 wagons, right, sir. Okay, thank you.
Thank you. Participants, to ask a question, you may press star and 1. Ladies and gentlemen, to ask a question, you may press star and 1 on your touchtone telephone. Next question is from the line of Naveen Sahadev from ICICI Securities. Please go ahead.
Yeah. Good afternoon, sir, and thank you for the opportunity. I hope I'm audible.
Yes, Naveen, you're audible.
Yeah. So thank you for the opportunity. Sir, as you rightly mentioned, we all are waiting for the railway wagon orders to come from the railways. But it's quite impressive to see the wheel set business order book also at about 700 odd crore. My question was on this particular business because the Odisha facility which we are trying to set up likely or seems to have a capacity of around 1 lakh wheel sets, if I am not wrong. So just wanted to understand how... Sorry?
Yeah, no, please go ahead.
Yeah. So my question was that when do you see, first of all, a couple of questions here, when do you see the commercial production for this particular forged wheel set to start? And also in terms of the opportunity, both in India as well as export. I believe bulk of it is initially to begin with, I think 50% export was mentioned. So correct me if I'm wrong, but if you could just explain this segment a little more as to how much, what is the opportunity we can see, what is the commercial production ramp up, just to understand or get a better perspective on this entire wheel set business. Thank you.
Okay. No, thank you for the question. Yeah, you are exactly right that it is about 100,000 is the total capacity. And see, the opportunity size is definitely very, very big, because right now we have one facility which is there in Aurangabad, but there we are constrained because we don't make our own black forge wheels. We need to import it. So in terms of a lot of order books also, there is a constraint in terms of supplies. So, but if you look at the entire landscape, if you start looking at the landscape for the passenger segment in India, today, all the trains which are made in the country, be it the Metro, the Vande Bharat, all the wheel sets which go into them, they are all imported. Today, India does not produce any wheel set. So that itself is anything between a 10 to 20,000 wheel set business annually. And that is one of the reasons also we have gotten Lucchini as a partner, because they are the biggest supplier globally when it comes to this segment. And this is a high margin segment, and it requires a lot of homologated technology which is needed. Then if you look at the general IR segment, which primarily constitutes of railway wagons, so in a year, on an average, about 20 to 30,000 new wagons are built, which constitutes about 120,000 new wheel sets annually. Plus, Indian Railway has a fleet of roughly about 3 odd lakh wagons, where there is replacement of wheel sets is about in around 7 years. There's a replacement of wheel set which is there, which again translates to roughly about 150 to 2 lakh wheel sets every year. So Indian domestic market roughly would be anything between 3 to 4 lakh wheel sets annually. And then definitely beyond that is the export market, where we have a committed offtake agreement from Tata Wagonka, which they buy close to about 20,000-30,000 wheel sets, 20,000 to 30,000 wheels every year. And beyond that, also Lucchini has been given the rights for the entire international marketing. So we don't see any offtake challenges. I think for us the key concern is to ramp up production and to see that the facility meets all the technical criteria for us to get homologated.
Great. Thank you so much for the elaborate reply. Just one clarification. The wheels that are used by the Indian Railways wagons, they are mostly the casted wheels, and these will be forged. So are we saying that Indian Railways will also start using the forged wheels? Because I believe passenger rail segment uses forged wheels, but Indian wagons use the cast wheels. I hope.
So in Indian Railways, we are using both mix of cast as well as forged wheels. So today, even the wheels which we are producing in Aurangabad, which goes into our own wagons, they are all forged wheels. So it's not something new. It will be, Indian Railway will continue to use a mix of both cast as well as forged wheel. On the other hand, as the speeds increase, cast wheels have a limitation that they can only be used up to maximum 100 kilometers per hour. So in future, as new designs come and as loading capacities increase, then the transition will be more towards forged wheels rather than cast wheels.
Understood. And my last question, sir, on this. Because there is some other competitor also who is setting up a capacity which is again pretty sizable, almost about, I think 228,000 or so. So, in your sense, is it likely to intensify competition in this segment domestically? Exports, of course, we may have an upper hand because of the tie-ups that we have. But domestically, do you see the competition coming up, or you think there is enough and more headroom for everything to get absorbed?
See, there's more than enough. First of all, there's more than enough headroom for, I think, our capacities which are there. Secondly, as I've told you, domestically also we are looking at more on the passenger segment and our own captive requirements. On the passenger side of the business, again, there's a lot of certifications and technology which is involved, which is for any domestic new producer without any kind of international accreditations to meet those standards is a long journey. And that is one of the primary reasons that we have gotten Lucchini as a partner, because not only it helps us accelerate our technical capabilities, but it also provides us all the designs which are currently used for semi-high speed and high speed, and through the availability of the design, again the homologation certifications. So that is how we are looking at the business, and beyond that, I cannot comment on what competition is doing.
No, fair point, and great, and really appreciate the fact that while we all wait wagon orders from Indian Railways, you are well into the game to really diversify your business very, very ahead of competition. So great, and all the best to you.
Thank you. Thank you very much.
Thank you. Participants, if you wish to join the question queue, you may press star and 1. As there are no further questions from the participants, I now hand the conference over to the management for the closing comments.
Yeah, thank you. Thank you for your insightful questions and continued engagement. Looking ahead, we remain confident about the structural opportunities available to Jupiter Wagons. India's continued investment in railway infrastructure, freight modernization, private sector ownership of rolling stock, and domestic manufacturing are creating a favorable environment for our core business. At the same time, our investments in rail wheels, braking system, electric mobility, and energy storage are broadening our addressable market and creating additional avenues for our long-term growth. With a strong execution pipeline and expanding product portfolio and multiple growth platforms, we believe Jupiter Wagons is well positioned to participate in India's evolving mobility and infrastructure opportunity. Thank you once again for your continued support. We look forward to interacting with you again next quarter.
Thank you, sir. On behalf of Systematics Institutional Equities, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.